The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
And we want to remind everyone that today is CoinDesk's Bitcoin for Advisors conference, focusing on the changing financial landscape. Advisors will explore the tools to best understand how Bitcoin, Ethereum, and other digital assets can successfully impact their clients' portfolios. And joining us now is Morgen Rochard, financial planner at Origin Wealth Advisors and one of the speakers at today's virtual conference. Hi, Morgen. So taking a look at the crypto markets, again, very interesting to see Bitcoin shoot up, but the rest of the crypto markets actually pull back. What's your outlook?
Well, I believe that Bitcoin is the only one that advisors should consider, and it's something that's going to be discussed today at the event. It is the most liquid, like Lawrence mentioned, and it is the one that has the longest proven track record thus far in the space. And so today's event is going to be about how advisors can include it in their practice, what questions they should be asking themselves as they go down the Bitcoin rabbit hole, and how they can implement this in client portfolios in a compliant way, in a way where they can communicate with their clients in a really educated manner about the asset class and what important aspects of the asset class they want to discuss with clients.
Hi, Morgan. So I think you're right. There's a good case to be made for investing in Bitcoin over the long term if you look at the price over the years. But I imagine you probably give some short-term advice as well. And that to me seems like that would be incredibly difficult since nobody ever knows what's going on with Bitcoin, why it rises, why it falls, what's going to happen next, right? So, how does an advisor handle that kind of environment? Like, how do you advise people in the short term about what to do with Bitcoin? Or is your advice basically just buy it and hold?
Yeah, I mean, I think it kind of depends on an advisor's practice. My practice is very focused on buying and holding, has always been before Bitcoin was even a thing in my practice. So it wouldn't be unusual for me to go out and advise to a client, hey, we're going to buy this and we're going to hold this for a very long period of time. We do that with stocks consistently in my practice. So as far as that's concerned, I feel like it probably depends on what kind of advisor you are and what kind of advice you're giving. If you're generally giving short-term advice, then yeah, you're going to have to advise on these things on a short-term basis. If you're more of a, asset allocator, set it and forget it kind of person, you set asset allocations to really mimic what a client is doing in their lives, then no, you're not going to have these just short-term discussions.
So Morgan, in the relationship between the financial advisor and the client, so overall, if we're looking at the entire industry, are we finding the demand is coming more from clients asking their financial advisors, look, we want this in our portfolio. Can you tell me more about it? Or can you make it happen? Or is it financial advisors looking at correlations and thinking about it from the perspective of portfolio management and saying, look, you need something that offsets your stocks and bonds and commodities, and something that's has a lower correlation, even if it's more volatile, is a good thing to put into this portfolio. Where's the demand coming from? Is it more of the clients or is it more the financial advisors?
I think it's going to depend on the practice, but I would say on average, it's probably more from the clients than it is going to be from the advisors, right? Advisors right now are very scared to do anything because they don't know how to be compliant in this space, right? The rules are a little fuzzy, right? The SEC said that Bitcoin's not a security and therefore we can advise on it, right? But it kind of depends on where you're custodying client assets, how you can get access to it. There's a whole issue of private keys. I think advisors feel like kind of fish out of water, and therefore they don't really want to allocate until maybe they have a little more rules and things set in place for themselves. Whereas I think clients are coming in, they're seeing prices of cryptocurrency going up, and they want to know, hey, is this in my portfolio, or how can I get access to it? Or they have a lot of questions. I would say in my practice, like the clients who don't bring it up, when we do bring it up, their eyes light up because they wanted to bring it up, but they weren't sure whether or not it was appropriate type of a thing. Or people are just asking about it and have been asking about it for a while.
So, Morgan, earlier you just said something that's actually kind of controversial, where you said, you were basically only focusing on Bitcoin. And I'm just curious, I understand why certain tokens one would be wary of putting in someone's portfolio. We won't name them by name. But, when you look at something like Ethereum, which is like the second largest market cap, that's at this point a pretty established, legitimate cryptocurrency. Do you see your position changing on that in the future, like in including other coins such as Ethereum or other large cap cryptocurrencies?
No. Ethereum has all sorts of issues. I'm sorry. I'm just going to say it. They're moving from proof of work to proof of stake. They have no roadmap in sight as to when that will be done. They've currently locked up a lot of client or a lot of money in that respect, and they're earning yield, but they can't move their money. They had a taxable event as a result of doing that. That to me is a huge red flag and not something that I would ever advise clients on doing. Right, my job as a financial advisor is to be a fiduciary. It's to protect my clients, and it's to make sure that they don't make mistakes like that. So as far as I'm concerned, I mean, there are other issues with Ethereum. We can dig really deeply into it, but I mean, they don't even know what their total supply is. It's pretty hard for me as an advisor to advise clients on something like Ethereum when they have so many issues that they're pretty forthright about. So maybe if that changes in the future, that would be something that I would discuss with clients, but right now, absolutely not.
Is there some sort of a way to measure it so that, look, every client, as you brought up, you're not a big fan of Ethereum, but every financial advisor does come to the table with an amount of bias, whether they know it or not, or admit it or not. Is there any sort of way in which you can measure objectively whether or not other cryptocurrencies outside of Bitcoin would be right for a client's portfolio?
Yeah, so when I look at asset allocations, I look at things that people can hold for 30 plus years, right? If they're not holding it for a long period of time, or if they're somewhere in the midterm, we're looking at allocating between stocks and bonds. We're not looking at allocating at some new asset class that could go to zero, right? Like the last thing that I want as a client is going to go fund their kids' education in 10 years or go buy a house in 3 to 5 years, right? And the money's not there because we allocate it to some token. It doesn't necessarily mean that there won't be new tokens coming on the market every single day, ones that have all sorts of promises. Right now, to me, these seem more like app coins than coins that advisors should actually consider, right? Not everybody has every single app that's ever been in existence on their phone. They just don't, right? Because not everybody needs all the different apps. What I'm looking for is something that universally clients can have in their portfolio. And for me right now, that's Bitcoin.
Morgen, I'm wondering what your thoughts are on this. Some financial advisors are pitching Bitcoin to investors to offset portfolio losses. As you know, crypto's taxed as a capital gain, and those losses can be sold and deducted against income, a form of wash trading, if you will, that may end at the end of the year if lawmakers get a couple of bill proposals passed. But is that something that you would advise for your clients?
Yeah, absolutely. I mean, if there's a legal loophole, right? The last thing I want is I want all of my clients to pay all the taxes that they are supposed to pay and not a penny more than that. So right now there is a legal loophole on it. Wash sales are appropriate, and we have advised clients to do that.
Maybe you could tell us a bit about your client and their interest in crypto exposure. What kind of proportion are you hearing from your client base that actually do want to get into crypto?
Nearly 100%.
Oh wow! Okay.
is that because you're very crypto focused, or is it because I mean, what were you doing before you were involved in crypto?
I've practiced. Gained a lot of interest in 2017 after the Bitcoin bull run, and it only increased from there. I would say my practice is if you looked at it on the inside, you wouldn't even ever think of my practice as a crypto-focused practice. It definitely is not. It is a very standard conservative financial planning practice where we focus on very long-term asset allocations and making sure that our clients always have the money that they need to do the things that they want to do. And we help them prioritize those things. So I would say that my practice probably looks like a lot of other financial planning practices in that regard. And people are very interested in this. I think the only difference is because I'm publicly open to Bitcoin, people are more apt to actually include those thoughts with me.